Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin tumbled below $91,000, and cryptocurrency markets gave back recent gains despite the Federal Reserve delivering its expected quarter-point rate cut. Bitcoin currently trades at $90,273 after volatile swings that saw the price spike above $94,000 before retreating. In major regulatory news, cryptocurrency marketplace Paxful pleaded guilty to 3 criminal counts for facilitating illegal activity and violating United States anti-money laundering laws. From 2015 to 2019, Paxful processed approximately $3 billion in crypto trades while collecting over $29 million in fees. Prosecutors found that nearly $17 million in Bitcoin moved from Paxful to illegal platforms, with Paxful profiting at least $2.7 million from these transactions. The Department of Justice reduced the criminal penalty from $112.5 million to $4 million after assessing the company's financial condition. Sentencing is scheduled for February 2026. The Office of the Comptroller of the Currency released a report warning 9 of the largest United States national banks about debanking practices. The report found that major banks including JP Chase, Bank of America, and Citigroup maintained policies restricting access to banking services for certain industry sectors, including crypto companies between 2020 and 2023. The OCC stated it intends to hold these banks accountable for any unlawful debanking activities. Nearly 200 consumer advocacy groups, unions, and financial reform organizations signed a coalition letter opposing the Senate's crypto market structure legislation. The groups argue the current bill leaves consumers vulnerable to fraud and poses risks to retirement funds. A key concern is the lack of ethics provisions addressing conflicts of interest, while President Trump and his family maintain financial interests in crypto ventures. The Senate Banking Committee is expected to mark up the legislation as soon as the week of December 15th. Gemini received approval from the Commodity Futures Trading Commission to operate as a designated contract market, concluding a 5-year licensing process. This enables Gemini to offer regulated prediction markets to United States customers, competing with Kalshi and Polymarket. Gemini stock surged nearly 14% in after-hours trading following the announcement. State Street and Galaxy Asset Management announced plans to launch a tokenized liquidity fund on Solana in early 2026. The fund will accept subscriptions in PayPal's stablecoin PYUSD and aims to provide institutional cash management on public blockchains. Ondo Finance committed approximately $200 million to seed the product. Stripe acqui-hired the team behind Valora, a mobile crypto payments app built on the Celo network. This follows Stripe's recent acquisitions of stablecoin infrastructure firm Bridge and wallet app Privy, plus development of Tempo, a payment-focused blockchain that recently entered testnet. Ethereum ETFs attracted $177 million on Tuesday, marking their largest single-day inflow in 6 weeks and exceeding Bitcoin ETF inflows. Large holders accumulated nearly 1 million ETH worth over $3 billion in recent weeks, suggesting institutional positioning. The ETH to BTC ratio climbed to 0.036, signaling potential strength in altcoins. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.